Hello, I'm Alan Kohler, founder of Eureka Report, which is now part of Intelligent Investor, and finance presenter and columnist for the ABC.
And I'm Stephen Mayne, contributor at Intelligent Investor, founder of Crikey and shareholder advocate.
And we are
the Money Café.
Morning, Stephen. Now, I was asleep when Trump was addressing the United Nations last night, but you apparently were not. So tell us what this speech was like. How long did it go for?
Well, he got a 15-minute slot and he went for 56. I mean, where do you start? There were so many funny things. I mean, the teleprompter didn't work. He complained about the escalator not working. And then he said, I offered to rebuild the United Nations building for $500 million and you gave it to someone else and it ended up costing you $5 billion and it's been a disaster ever since. So, and then it just was, you know, you're all going to hell, the climate change hoax, you're all being swamped by immigrants. I'm the greatest in the world. I've solved 7 wars. Biden was a disgrace. But even lots of weird cameos, like I had a brilliant 49 seconds with the Brazilian president on the way in, who I previously hated, but now he seems nice, so we're having a meeting next week. In between, he's about to bail out Argentina. He has agreed to meet Albo on October 20, the ABC is reporting. So he's got a whole line of people who he's meeting on the sidelines. The Americans are hosting a big thing tonight. But yeah, it was just, I think he's given probably the majority of the worst political speeches since the Second World War, Trump, but I reckon this will go down as his worst. It was just so irresponsible, wild, out of control. You know, I don't like the mayor of London. He's trying to introduce Sharia law. You know, I mean, that's just one of the crazy things.
He said that?
Yeah, he said that. He basically said, all your countries suck. None of you know what you're doing. We're better than everything. I should get the Nobel Peace Prize. Listen to me and give me lots of awards. You know.
Well, so it's always exciting getting up in the morning to open the New York Times to see what the latest Trump outrage is, and what they've gone with today is your countries are going to hell. That's the line that everyone's gone with, including the Financial Review this morning.
Yeah. Well, that's, you know, he claimed, you know, Biden let in 25 million illegal immigrants and rapists as you all emptied the prisons and you killed our children. And now we haven't had a single illegal in 4 months. We've closed the border. We're shooting all the drug dealers. Drug dealing is totally stopped. Meanwhile, your countries are full of immigrants. And he went through and listed the fact that he claimed that Switzerland and other countries, the majority of the prison population were immigrants because you haven't been as tough as me. So, yeah, I mean, I suspect probably Stephen Miller, who's his sort of deport everyone guy, his sort of Goebbels guy. I reckon he probably wrote a fair chunk of it, and it was just flood the zone, outrage everyone. But yeah, I mean, we'll be, I guess, but with Trump, you just move on the next day. There's something else, you know, he's blaming, he's fixing autism, you know, I mean, just where do you stop? So
the other story about Trump this morning is that he's said that he's had a meeting or discussion with Vladimir Zelensky of Ukraine, and now thinks that Ukraine can win the war. He's changed his mind, and he now thinks Ukraine can win the war.
Yeah, and he did get stuck into, he called out India and China for buying all of Russia's oil. And a lot of you dodgy Europeans, you're doing it too. How do you lay straight in bed? But yeah, he did call out India and China specifically. And then he went on to say we're the biggest oil exporter in the world. You know, basically you should be buying our oil, not Russia's oil. But yeah, you're right. He did give hope to Zelensky. And I think all the meetings on the sidelines. I mean, this was a meeting called by France and Saudi Arabia with Gaza a big part of it. And so it was. I think it's very important that it all got pulled together. Israel's not there. Russia's not there. So, yeah, but he's just sort of stolen the agenda, as he does. You know, he just likes to everyone talking about him. So it's meant to be about recognising Gaza, and it's all instead about him and climate and immigrants and how good am I. And, you know, do your trade deals or we'll screw you. And we've had 17 trillion come in the last 8 months versus only $1 trillion over Biden's 4 years because he was hopeless and our country was going to hell. And now your countries are going to hell.
So what do you think of the Nvidia OpenAI deal, $100 billion each way? I'll give you $100 billion, you give it back to me.
Well, it's a giant merry-go-round by the biggest of the big tech, using their extraordinary cash flows to defend their moats, and drive into what is going to be a profound transformational tech change. So, look, the numbers are astronomical, but the share price, the market's still buying the story. And unlike the tech bubble, all these players have the cash flow, have the profits to make these announcements. So, I mean, what do you think?
Well, I think what we're seeing is the greatest amount of capital expenditure in history. It's basically it's a capital expenditure boom. That what they're doing is spending money on building the infrastructure for artificial intelligence in the belief that they'll make tons of money from it. But they're not actually making money from artificial intelligence yet. They're making money from companies like Nvidia and so on, are making money from selling the equipment that goes behind AI, including data centers and obviously also semiconductors. And so we're yet to find out whether artificial intelligence itself will make enough money to pay for the capex.
And Sam Altman is saying, we need to be able to save so many aspects of the world that we have to spend all this money so we can just have the bandwidth to do it all, because the opportunity from AI to help humanity is just so enormous. We just have to absolutely go for it. And so there's a lot of first mover advantage pushing going on. I mean, interesting how Oracle has stepped into the cloud space because they've signed a massive deal with OpenAI. And then you got Apple. I thought it was an interesting line about Apple. Look, you should look at Apple as part of the AI infrastructure play. Don't look at them as being a compute thing. Is that they'll partner up with someone and deliver AI through their phones, just like they deliver search to Google through their phones in the most successful partnership ever, which is preloading Google search on Apple phones, and everyone's making a fortune. So the whole, even Apple shares are going up. Everyone's buying the iPhone 17, and maybe they haven't missed the AI train, and they're just part of the infrastructure to deliver the AI products. Someone else's product on the Apple infrastructure.
Yes. Yeah.
So are you still? I mean, my head spins. I mean, we've just never seen anything like this. It's moving so fast. I don't know. I mean, do you think it's going to fall in a heap and it's a bubble, or do you think it's sustainable and it's just an exciting, massive opportunity and US big tech hegemony like we've never seen before?
Look, I just don't know. I mean, I use AI a fair bit, ChatGPT in particular. I think it's fantastic, and I like it. I use it a lot just to find stuff out. Like it's such an easy way to search on the internet. You get ChatGPT to do it for you. You ask it a question and it goes and finds out, rather than having to sort of go and read and find out stuff yourself. So, yeah, I mean, but I can't see how anyone's making money. And I mean, it's just as well OpenAI, which owns ChatGPT, is supposedly a not-for-profit, because I can't see how they're making money out of it yet. I mean, maybe they will eventually, but I mean, the thing about AI, one of the things about AI is that unlike search, I can't see how it's going to end up being winner take all. I mean, internet search became Google's monopoly, and they ended up making all the money. ChatGPT, look, it's good and it's definitely the leader, but is it going to be a 90% monopoly? I can't see it. There's so many AI machines, and including from China now. So look, I think it's too competitive for anyone to make a lot of money eventually. So look, I do think that eventually the market will adjust to this. Whether it crashes, I don't know.
I think there's going to be a bit of an energy crunch. I think that's going to be the single biggest constraint. I mean, the energy demands are ridiculous. And, Microsoft is recranking up, the 3 Mile Island nuclear plant. So I think that's going to be the biggest, well, along with chips. Chips and power, I think, are going to cause some rationalisation and constraint, because the power demands are just so massive. It doesn't make sense to have so many different operators building the infrastructure. You're right. So it will consolidate. It's a race to win, but the share market is saying that all the big tech are going to win. I mean, they're just not. And Oracle was meant to be a loser as a software company, and now it's going through $1 trillion, and people are saying it's one of the biggest winners. Yeah. And there's so many tangential winners. I mean, Harvey Norman shares are at a record high, and Jerry Harvey is saying that everyone's buying AI-enabled products, so they're upgrading their tech to get the latest laptops. So, Jerry Harvey just turned 86. He's at his best year in 86 years. His share price has almost doubled. He's absolutely booming at a record high, and he's saying, thank you, AI.
Yeah, right. What's AI doing for him?
Well, just people are buying new tech. They're buying new computers, new phones, new everything, because they're looking for the latest AI-enabled gadgetry. The lights that you can turn on and off, all that sort of stuff. And he, selling the pics of the gold rush type thing. So he's absolutely booming. But and who's not booming, Alan?
Myer.
Myer. What'd you make of that yesterday?
Well, gee, I mean, what a difference between Myer and Harvey Norman then, really. I mean, their share price is down by 2/3 this year, another 30% yesterday. Unbelievable. I mean,
it did rise from 50 cents to 124 and then back to 48. So it's just gone back to where it was 18 months ago. But yeah, you're right. It went from 1.1 billion to 830 million yesterday. So the Solilu magic has evaporated.
Yeah.
And there's all sorts of operational problems. But it was amazing. I mean, everyone thought Solly's just going to turn it around, Olivia Wirth, and then bang, the new National Distribution Centre doesn't work. Everyone's stealing their gear. Soft consumer demand. People prefer Kmart, everyday low prices.
And what did you think of them having to write off a couple $100 million from the clothing brands that they bought from Solilu?
Well, I'm still amazed that deal, that very large related party transaction, got through so easily, given all the history with Yannon and related party transactions back in the day in the 90s with Solly, and it got through on the basis of Solly's retail magic because along with Brett Blundy, he is the best billionaire retail entrepreneur in the country. But what I didn't like about Alan was that basically the independent directors effectively ceded control to Solly. So he only owns 26.8%. He's got an executive chair in there in Olivia Wirth. His long-term mate, Gary Weiss, is meant to be the lead independent director. Terry McCartney's his man on the board, and there's one other guy on the board. It's a 4-person board, and he effectively has control with just 27%. And board nominations close tomorrow, Alan, for the AGM at the end of November. So if you want to nominate because you think that we need some more independent directors, get your signed nomination in by tomorrow, 5 o'clock, and you can have a bit of an interesting board contest because the shareholders won't be happy with what's going on now.
Well, but that's more your caper, Stephen. Are you going to stand for the board? Come on. You should do it.
Look, I want to stand for 2 to 4 boards this season, just to sort of get a message out there that you can't do dodgy capital raisings, or if you're a Perth-based miner, come on, you've got to give online access. But the other category where it is good to run is where there's a need for more independent directors. So I did that to Harvey Norman back in the day for years and years and years. There was 20 to 30% protest votes against the directors because there were virtually no independent directors. So I just ran in 2019 just to say, look, you need more independent directors. I think I got 14% or something. So occasionally you do it where you've got a controlled company that should have more independent directors. So Myer is ripe for that sort of a campaign. But if I do it, I got no credibility. I just get 1%. So I need someone credible and respected like Alan Kohler, someone to step up who's actually got a real name who the shareholders could embrace, because Myer needs independent directors, independent of Solilu, particularly after this latest debacle.
My credibility took a hit last night on Channel 10 show called Cheap Seats. Have you ever seen that?
No.
Well,
what did you do?
Well, my son was on it. Chris Kohler was on that show live, flogging his book. He's got a new book out called How They Get You. So he was on there, and they were talking about me, and they showed a couple of grabs of me on the news. One of them talking about records in the high jump, which was years ago. I did that on the news. I think it was during the Olympics. And it wasn't my finest moment, I must say.
It wasn't
anyway,
as your graph comparing oranges and apples.
Well, that's possibly true. But, yes, anyway. I had a graph the other night showing lamb prices and chicken prices. No, mutton prices and chicken prices. So that was... but that's kind of fun.
Was there some mutton dressed up as lamb joke was there? Yes.
Oh, yes, there was. Exactly.
Yes.
All right, let's move on to questions. Before we go to questions, here's a quick word from our sponsor.
Want to enjoy retirement on your terms? Whether it's travel, hobbies, or more time with loved ones, the key is planning ahead. With longer lifespans and rising costs, relying only on the age pension and employer contributions may not be enough. That's why InvestSMART has created a free retirement ebook. It includes practical strategies to make the most of your super, what you should know about self-managed super funds, and why it can make sense to invest outside of super. It's never too early or too late to start shaping the retirement you want. Download your free copy today at investsmart.com.au/guides.
Okay, first question's from Mel. I'm concerned about the sheer volume of passive investments flooding in both directly from ETFs and from super funds into the ASX 200. Total super now 4.2 trillion against the ASX market cap of 2.2 trillion. If billions of dollars continue to just blindly invest in the ASX 200, then I guess it will just continue to rise indefinitely. And he goes on, it's quite a long question, but it's interesting and worth discussing, I think, because I do think at some point super funds are not passive, right? They actually do. They are competing with each other and they're trying to make better returns than each other. And if at some point they reckon that the returns are not to be had from the Australian stock market, they'll be out. They'll be in cash.
Yeah, but the super funds are also giving big mandates to the index funds. So when you look at any share register in Australia, the three big global index funds are State Street, Vanguard and BlackRock. And they typically own about 15% between them of every company. It's actually closer to 30% in the listed property sector because so many global investors tick a box that says, we want to be exposed to Australian property. And so these index funds just have to go out and buy every last listed property trust. So that's the sector which is most supported by the index funds. But look, you do see the big stocks getting to multiples that don't make sense, be it Commonwealth Bank, be it Tech One, be it Aristocrat, be it Wesfarmers. So I think there's a problem with the index investors accentuating the upside of a smaller number of stocks and underpricing anything which is not in the index, and they're all getting taken out. So,
yeah,
but it's not irrational. Like, you know, you've still got companies like Seven West Media or Star Entertainment that crash out of the ASX 200 because their business is fundamentally bad. So the index funds are not buying crap businesses. They're just accentuating the purchases of the better valued, better respected businesses. And Commonwealth Bank is probably the most extreme example. And everyone agreed that made no sense, but it has recently corrected to a degree.
Yeah. I mean, Mel's point is he says that ASX 200 becomes an absolute gravy train for any company that's in it. I think there's a point to that.
Well, yeah, and it does lead to mergers. Like you see a lot of companies that will attempt to get into the ASX 200. So it now becomes an index game to get in there. And frankly, the biggest fraud or the biggest risk that is out there in public company land is the company that lies and cheats its way into the ASX 300, and then the founders and the promoters exit to a bunch of dumb money index funds who have to buy it despite the stinking, overhyped rubbish. So that's actually a bit of a game. Is the proxy advisors do this? Is, you know, Ownership Matters and others keeping an eye on companies that are getting close to the ASX 300. And I won't name names here, but there's been some very prominent examples the last few years, and then really going through their business to make sure it's not just a pile of rubbish. And there have been a couple that got into the 300 and then got smashed by regulators and stuff because a whole bunch of their dodginess was exposed. And that was the trick they were trying to do. is bullshit their way into the ASX 300 and then sell out to dumb index funds, and you've made hundreds of millions. And so you need a depth of companies so that you don't get rubbish getting into those indexes where dumb money just comes in and supports them because they're in the index. Now, Andrew from Budrum says, been listening to Ha-Jun Chan's historical observations about the highest rates of income tax over time. In the 1940s in the USA, the highest rate was 94%. In Australia at the same time, it was 75%, 99% in the UK during World War II. Would returning to this policy rectify the growing socio-economic issues and crises engulfing Western governments with unsustainable debt and help to raise living standards for society at large? Was taxation reform the most important policy that lifted people out of the Great Depression? I see similarities between Rockefeller and Carnegie and the tech bros of today. Keen to hear your thoughts. My God. What do you think, Alan? Andrew from Budrum, 99% tax rates, eh?
Yeah, well, that's true. Australia's top marginal tax rate was 75%, and it's been progressively reduced over time to what it is today, so 45%, and plus the Medicare levy. So I don't think the top marginal tax rate will ever go back above 50%. I think that's gone now, partly because capital's mobile and has to, you can't keep it in the country. People, I mean, look at all the tennis players are living in, the Caribbean. So it's too easy to do that. You can't. It's no longer possible to tax rich people, rich high earners, at anything more than 50%.
Yeah, I agree. Look, but that particularly applies to the corporate tax rate because corporates are more mobile in terms of their domicile. With income tax, I mean, people do like to live in their home country, and so. But you're right. If you're same with inheritance taxes. If your inheritance taxes are too high, your billionaires will all go and live in Monaco. And then, of course, you've got the least mobile, so land taxes, it's not mobile. And that's why, the Victorian government can come out with the most brutal property taxes in the country because you can't pick up your property and take it away. You're captured. So,
yeah. And that's why, and this is why we progressively had other taxes coming in, like capital gains tax in 1985 and then goods and services tax in 2000. So
now, what last Friday was, Alan? Last Friday was the 40th anniversary of the introduction of the capital gains tax. So if you bought an asset on March the 19th, 1985, you were tax-free forever. If you bought it on March the 20th, 1985, you were paying capital gains tax. So there's only a few big CGT-free assets left. The Reese family in Wilson.
Did you mean September?
Sorry, September. Yes, I did mean September. Sorry, well corrected. And Jerry Harvey. Part of Jerry Harvey's shareholding in Harvey Norman. It's not only booming, but some of it is capital gains tax free because he started that business with Ian Norman in 1982. Anyway, sorry to get distracted, but
that's a beautiful thing.
Yes, but yeah, we'll never see war like this. Is the thing. During war, governments can basically take everything off you. They can force you to work for the war effort. They can take your income. They can put the taxes up. They can do emergency provision. So,
yeah, which is another good reason not to have any wars.
Yes, no, exactly right. Now, Rob says, as usual, Alan, it was a great weekend briefing that you produced for its subscribers on Saturday morning. I've got a question for you, though. You seem to have great faith in the resilience of the US democracy, despite all evidence to the contrary. Trump et al. And neighbourhood standover men writ large, and the sensible American people seem paralysed in the face of their depredations. I'm a lot more pessimistic and worried that Australia will come into the malign sights of a marauding US administration, especially given our rare earth potential. Your thoughts?
I don't know what he means by marauding US, that we come into the sights of the marauding US administration. What does that mean?
Well, it just means that we're so scared of Trump that we hand over control of all of our rare earth deposits in order to not cop tariffs.
I see.
Or, yeah, that he'll be a mafia standover man who extorts our great assets. I don't think that's the risk.
I think it's worth noting that it's been a pretty eventful 9 months. I mean, he's only been in power for 8 to 9 months, and look at how much has happened. And he's got another 3.25 years to go. So, I mean, crikey, it just really does. It makes you wonder what else can happen over the next 3 years.
I agree, and this morning's speech sort of brought it all together in terms of how crazy it's been. because it was almost like he was summarising everything he's done and attacking the rest of the world and sowing hate against migrants. So, but I don't know. I guess my sort of hope is that at the end of the day, he's a business guy. He's not like Putin, who was a security guy. So hopefully his corporate instincts hang true and we don't get Putinization, where you've got him, just focusing on being a dictator. And I think it is important that the fight back against Jimmy Kimmel and the fact that Disney got smashed and they've reinstated him, that was a very good sign that the guardrails in the US against authoritarian, government-controlled media is going to hold. So welcome back, Jimmy Kimmel. And but yeah, it's going to be a hell of a ride.
Just a couple of things on that before we move on. One thing I did write in the weekend briefing was that a lot of people are wondering or a bit puzzled by Donald Trump's refusal to try to unify the country after the assassination of Charlie Kirk, and that he's just basically saying, I don't love my opponents, I hate them, and I want to bring them down. And he's just basically sowing discord. And it seems to me that this is basically part of the strategy. He's shown that really a lot of his governance is around about emergencies. The tariffs were introduced using emergency powers. He's all about creating an emergency in order to give himself more power. And I think that this is what he's trying to do now. He's trying to create the basis of having a general emergency so that he can not declare martial law. But a lot of people are looking at it and saying, is Charlie Kirk Trump's Reichstag moment, which was the fire in the Reichstag, the German parliament in 1933, that allowed Adolf Hitler to declare martial law and basically take over the government because he said we're under attack from terrorists. So I do think that there is a risk of that sort of thing happening. And the second thing is that I've been reading a book called, written in 1969 by one of Nixon's advisors called Stephen Knight, called, the book is The Coming Republican Majority. And what he talked about in the book is how the shifting demography of America was going to lead to the ascendancy of the Republicans. And I think that what's behind Trump and MAGA and all that is a fairly fundamental change in the sort of structure of the United States. And I don't think so. I think Trump is more a symptom of that rather than a cause of the problem.
Yeah, I think even this morning, that speech, there was a lot of anti-globalization in that speech. And you've seen that thing he tried to do with the $100,000 fee for all the international workers for big tech, the visas. But he gets massive blowback against that because American hegemony, it relies on globalization. I mean, it is only dominant because of globalization. It makes a fortune selling products to the rest of the world. So I just think that it's going to be impossible. The genie's too far out of the bottle for him to unscramble all that and turn America into some sort of authoritarian regime. But he's definitely out for revenge. He's a winner-takes-all guy who likes to destroy his enemies. He values loyalty over anything else. He's incredibly corrupt, and he respects autocrats, and he doesn't respect the rule of law. So, look, it is scary, and it is still a guardrails question. Rob doesn't think the guardrails are going to hold. I'm with you. I think they will, but it is one hell of a scary ride.
Okay, another question from another Stephen. He says, my question to you both is, why does the government never put itself into the position of running a business in a certain industry, and so on? He goes, it's quite a long question, which we don't need to do, but I think one of the things he's talking about is hospitals and public transport and so on.
Yeah, but governments run the entire water industry in Australia. There's virtually no private water. The Transport Accident Commission in Victoria, it's a government monopoly on third-party insurance, and they make a fortune. They ran Medibank for many years.
But they did get out of a lot of businesses. Let's face it.
Oh yeah, well, they privatised everything from Qantas to Medibank and a lot of electricity and gas. For me, the biggest mistake is that they should have had some sort of government-owned mining company, particularly in WA. But they just allowed the private operators to take all the resources for a tiny amount going to the owners, which is the taxpayers. That's for me the biggest problem.
We found out the other day that the 000 emergency line has been privatised. I couldn't believe that. What are we doing privatising that? Optus is running it and they mucked it up. People died.
Who's going to run it? Telstra's already privatised. I mean, I guess the NBN is an example of a government-created business. So there are some, but it's not that many. Now, Jason says, I saw this chart on Reddit showing housing prices compared to the price of milk at different points in history. I.e., if you went into a supermarket at any given time, how much milk would you have to buy to be able to afford a house? Now, Jason's chart shows that you'd need 90,000 litres of milk in 1975, and now it's 777,000. So is that right, Alan? I mean, you're the king of the graphs.
Well, yeah, look, it's a really good graph, and I'm going to put it on the news tonight. But that increase in house prices expressed in litres of milk is up eightfold, 8 times, right? The actual house price in dollars is up 30 times in the same period. So what that tells you is that milk has gone up a lot as well. So it's not actually – so the house price in litres of milk is up a lot less than actual house prices.
Wow. Well, this is great. A Money Café question leads to a graph on the news.
I think it's a great graph. He hasn't actually sourced it, so I don't know where he's got it from.
Just say Money Café
Reddit.
On
Reddit.
Credit.
It was on Reddit. Yeah, that's right, Reddit.
Very good.
Ian in Rutherglen says, predictions are hard, especially when they're about the future, but as America turns itself into some kind of high-tech Zimbabwean kleptocracy, I like that, what are the consequences of the economies in the saner parts of the world? The Mad King's latest shooting itself in the foot act, $100,000 skilled visas, for example. By the time you sit down for a coffee, there'll be even more. So listen, we've probably been on about Trump a fair bit in this episode, so probably shouldn't keep going.
But I say globalization can't be unscrambled, and migration is the most highly regulated and controlled part of the system already. But Trump's claiming it's out of control, and he's running this white supremacist, isolationist, ethno-nationalist line, which is not compatible with US corporate domination. And big tech's never been bigger in corporate domination. Anyway, Riss says, regarding Harvey AI, or the chat GPT for lawyers, could AI force a shift away from the arguably unproductive billable hours model in sectors like law and consulting? And what would the broader economic implications be? What do you reckon, Alvin? I hate the billable hours model for lawyers. For me, it's just a massive conflict of interest to milk the file and fight and not settle, because the longer the fight goes, the more you make. So if ChatGPT can end that dodgy system, I'd be happy.
I agree that billable hours is unproductive. I mean, and maybe what we'll get up with is AI is billable seconds. That'd be good, or microseconds. It'd be much better. Alex says, a housing graph question for Alan, noting that vision is somewhat impaired on an audio podcast. I've seen graphs that tracking median house prices versus median incomes, but less stay at home. Parenting now, I can't find a graph tracking median family income versus the median house price over time. I've watched with a degree of incredulity the ongoing march of house prices in Oz, and I understand there are heaps of factors, but in the end, a house will not be bought unless someone is willing to and able to pay for it. And I do wonder if part of the explanation is a family unit having more overall income over time. Yes, well, there was another graph that I think I'll put on the news tonight, which shows that the proportion of two adult families with dependents where both adults are working has gone from 40% to 70% or 75% in the last 50 years. And so, yes, there's a big increase in both partners working. And, yes, that has increased family income. But the question is, what's the cause and what's the effect? Because it seems to me a big part of the reason both adults are working is because house prices have gone up so much.
Correct. So, you need two incomes to handle cost of living in Australia, particularly house prices. So, yeah, maybe that graph should be household income to house prices versus individual income, because there are more earners in each household, particularly with kids staying at home.
Yeah, well, that is.
I mean, we've got three adult kids, all working, all at home.
That is what I did with the book. With my book on housing, I did it on the basis of household income rather than individual income. And it is the case that house price to income, household income ratio, has gone from 4 to 8 to 9 times household income. So it isn't just about individual income. It's about an increase in house prices relative to household income.
Yeah, absolutely right. Now, Jonathan Bussing, who is a director of Mantle Minerals, has written in responding to last week's exchange, where a shareholder in Mantle Minerals wrote in to say they thought it was a bit dodge that Mantle Minerals had sold off some territory next to Northern Star's Hemi gold mine for $13.5 million. And he's written in to say it's all above board, and the reason that De Grey wanted to buy this territory was that they needed additional ground to redistribute their water from a large future open pit mine as part of the development planning. So it wasn't a dodgy deal where they knew that they'd struck gold and they were buying it on the cheap. It was just a sensible move. And I've looked into Mantle Minerals. Look, they've got 102 million of accumulated losses. Their shares, they've got 7 billion shares on issue trading at 0.001 cents. They didn't have the cash to, raise even more money to try and build another gold mine. So at the end of the day, they've lost 100 million and they've sold off a key asset for 13.5 million. They're about to do a $7 million capital return. And they're just one of many tiny explorers which blow lots of money, don't find the gold and run out of cash and have to sell their territory in the end. So there's no scandal here to our questioner.
Now, final question is from Dean, and it's directed, I think, towards Stephen. I was reading a recent New York Times piece about how tightening corporate governance, disclosure and ESG-related expectations are making listing on public markets harder. Got me thinking. Stephen is one of Australia's most vocal shareholder activists and governance campaigners. I wonder whether his efforts, while aimed at better accountability, could actually be making it less appealing for companies to list on the ASX, and hence his efforts are actually contributing to the decline of the ASX and growth in private equity control of new entities. So, Stephen, you're driving the companies away from the stock market.
Look, I do think about this because I just do words and the odd board tilt. But I actually think the activism which is causing more grief for companies is the climate campaigners who put up shareholder resolutions. So Woolworths last year had a salmon farming resolution put up by activists. And I say these shareholders don't want the company to make lots of money and prosper. So it comes down to what is the motivation of the activist? Are you trying to shut down the coal industry? So I want companies to prosper, maybe except for in the gambling industry. And this year, Woolworths, for instance, is getting a shareholder resolution on deforestation certification with beef and changing certification on timber. So, you can't do these shareholder resolutions to Aldi, which is a private retailer. So, look, public companies are more vulnerable to attack. And people do say that private equity, you can just get on and run the business. You don't worry about, all the ESG and the governance rules. So, look, I think there's something in the distraction of being a public company, but it's a worldwide trend of shrinking public markets. And I think that government regulations like modern slavery reports, or, you got to do your gender equality reports. You got to do all these different climate disclosures. So I think that the amount of government regulation on public companies is a bigger issue than just me standing up and asking 4 questions online at an AGM. But I think there should be more. I mean, I did 2 AGMs this week, EGMs, Platinum, takeover, merger. It was just me and David Kingston, who's the best shareholder activist in the country. And Gold Roads Resources got taken over for $3.7 billion by a South African company this week. I was the only shareholder asking questions. I mean, this is a joke. That shareholders should be asking questions and no one does it. That's the bigger problem. It's not too many people asking questions. It's not enough. Sorry for ranting there, Alan. Still trying to
No,
get
you're
you
forgiven, Stephen.
When are you going to come to your first AGM and ask some questions?
Oh, no, my days of going to AGMs are over, I think.
Well, they never started.
Oh, I used to go as a young reporter. I'd go to AGMs and report on them. It was very terribly boring. Couldn't stand it. Oh, not another AGM.
Well, that was before teleconferences, wasn't it? Where you'd only get access to the company, once a year at the full year results and then maybe at the AGM. So, they have become redundant from a news point of view or an access point of view. So journos don't really go. People don't really report them.
No.
So, but it's the most important governance meeting of the year. You need them for when things go wrong. When things are going great, you don't need AGMs, but you need to be able to appoint the directors, approve the remuneration. So they're important to have it. And we've got a great governance system. We just need more people contributing to the decent debate at the AGMs. We need fund managers and analysts to ask questions at AGMs. That's the missing piece.
But the fund managers and analysts
don't turn up.
That's because they get one-on-one meetings. The
selectively
CEO,
briefed. They get selectively briefed.
That's right. The CEO goes around, does a roadshow, and he spends an hour or so with each fund manager. So they don't need to go to AGMs. Crikey.
Yeah, that's right. So don't blame me, but please buy shares and go to AGMs. And if you're interested, listener, nominations for the Myer board close at 5 o'clock on September 25 if you want to create a bit of an interesting AGM at the end of November for an iconic retailer that's in a world of pain at the moment.
Thanks, everyone, for listening to today's episode of the Money Café. I'll be back next week with James Thompson. Send in your questions and we'll answer them together. Email to themoneycafe@eurekareport.com.au. Until then, I'm Alan Kohler, founder of Eureka Report, which is now part of Intelligent Investor and the finance presenter and columnist for the ABC.
And I'm Stephen Mayne, and we'll see you in a fortnight.